Okay, so what are the top 5 things you can do today to boost your credit towards buying a home? Jeff.Loveland.
Let's talk about it.
Guaranteed rate here to help us out. Okay, so want to buy a house, maybe try to buy a house, credit score is just a little bit lower on the cusp. What can I do right now that's going to have the quickest, fastest impact on my credit score?
Absolutely. So depending on your scenario, everyone's a little bit different, but let's say the 5 things I hear the most or that work the most for most people. Number 1 would be getting added on as an authorized user to a credit card. That has been a tremendous help for people. Let's say that they don't have a whole lot of credit, right? They're maybe first-time home buyer, young, and they don't have a lot of credit history. If they can get added on to a significant other or a spouse's credit card, really it's awesome because it gives them the length of history that card has been opened. Which I've had clients that are 23 years old and they have a credit card line that's 15 years old because they've gotten added on to mom and dad's, and that helps them boost their credit score.
And this could be even somebody who they're not related to, right? It could be a friend, technically.
Yeah, technically, yeah. As long as that friend's comfortable with them as an authorized user on the account.
So here's the caveat, okay? Doesn't hurt you when you're selling this to somebody, right? You're selling this to a friend, loved one, family member, whatever, right? Hey, I need you to add me on your credit card as an authorized user or one of your trade lines.
Yeah.
First thing they're going to think is, well, I don't want your bad credit. Why would I add you to my perfect, immaculate credit? You know, this is, you got to think they're probably pretty proud about that. It's been going on for years or decades. Sure. It only hurts them. Okay, it only hurts them if, let's say, they decide to get you a credit card, which they don't have to do. Oh. They can add you as an authorized. Okay, so we lost our screen. We're back at you from that commercial break, and hopefully we got a sponsor somewhere in there because we like money. Here's the thing. When you're selling this to somebody and you're asking them, they're going to go, well, I don't want to get your credit, right? It doesn't work that way. You get all the benefits of piggybacking off their credit. You essentially absorb their credit history. The only way they could really get hurt is if they decide to send you a credit card, which they don't have to be an authorized user. Let's say they decide to send you a credit card and then you go ham and run up a gigantic bill and decide to not pay that. That's when it negatively affects them. So they don't even have to do that. They can just, I think, either cut it up or just not even request a card, and still you can come on as an authorized user and absorb all those benefits. So it's a win-win for both of you. It's just a matter of finding somebody who's cool with letting you do that. And
when you're vetting out your candidates of who to ask, the other caveat for you as the buyer, right? Because remember, you're doing this in the hopes of you're going to get into a house soon, right?
Yeah.
So 2 things. Number 1, you want someone that's responsible that pays their credit card on time because you are getting that credit history. However,
good history,
if they don't make their payments on time, you could get dinged with that late payment.
Now you absorb the bad history.
Right. And even if they do pay it on time, you also want to make sure that it's a low balance, because if you're at the top end of your budget, check out one of our other videos for debt to income ratio. But it also, if you have a large credit card payment monthly, let's say a couple $100 a month, or
didn't think about that.
That right there could affect you adversely. You're going to get the good credit score, but you might get a higher debt to income ratio and not be able to qualify. So there's several things when you're looking to do this that you need to vet the candidate out, who to ask and how it's going to benefit you. So that's number 1, right? Is the authorized user. Number 2 that I would say, if you're just building credit score, not trying to build from a low credit score, but let's just say you don't have very much credit at all, is you yourself get a credit card, right? And people ask me all the time, well, Jeff, I don't have a credit score or I have a lower credit score. They won't, the credit card companies won't give me one. Well, we have a workaround for that too. Yeah. It's called a secured credit card. So essentially what you do, you take $500,000, whatever you got, take it into the bank.
500 or 1,000.
500 or 1,000, thank you.
Unless you have 500,000.
Yep, that'll work.
Call us. No.
We just go straight cash buying the house then. You take that into your bank, and you say, I'd like to open a secured credit card. What you do is essentially you're prepaying the credit card, right?
Yeah.
You give them $1,000, they give you $1,000 line of credit then that you can work on and you can pay back, right? And that's a cool way that allows you to start building your credit. And you can do the authorized user and that credit card in unison and kind of help build your credit very quickly that way.
What have you seen as far as like an average time where they can get a significant bump in their credit from going the secured route if they have no credit, for example?
Sure. I had a client that he was no credit, and I think it took about 4 months, and he was in the mid 7s. So it's definitely doable.
Results. Okay, what else?
Another big one. Let's say now let's change from 0 credit to, let's say you got some dings on your credit, right?
You got credit, you just got some
Yep.
tarnished past.
Yep. One of the big things that you can work on is deleting your collections, right? So whether they're medical or whether they're, you didn't pay your Verizon, T-Mobile, whoever bill, right? Your phone bill, you can work on getting those deleted. Now that's a little bit harder road to go down, but if you can negotiate with the collection company to get them deleted, and that's the big thing I tell people, don't just pay your collections.
Yeah.
Because you're losing all your leverage at that point, right? You essentially want to negotiate with them. If I pay you X, can you guarantee me in writing that you will delete this from my credit report?
And get a deletion letter too, right?
That's exactly right. That's exactly what it's called. Yeah, and so that's the big thing. The worst thing in the world is you hear, yeah, I paid this $1,000 collection. It's still on my credit. What can I do now?
Yeah.
Well, now you're sitting there holding the bag basically, because now you've lost all your leverage and they don't have to do anything.
Yeah. Yeah, exactly.
So work on that. And once again, when you're doing your credit repair, whether it's with a company or yourself,
Everything's going out, by the way. We just lost our TV. We lost our lights. That's okay. We're here. All right? We're right here with you.
We're not giving up today.
All right?
Anyway, so the big thing there is make sure you have a game plan. So when I am pre-approving a client, and let's say we do need credit repair, I have a capability to do these credit plans that will tell me your money is best suited to delete this collection or to open a credit line. So you're not just randomly doing these
Hoping for the best.
Yeah,
Great
exactly.
strategy.
Yeah,
Pretty
exactly.
good idea what your points will influence.
Exactly there.
That's great.
So moving on to the next one is potentially lowering your revolving credit card debt, right? So a big ding on your credit is typically a high balance of your credit card. Once you start getting above 30% utilization, let's use the $1,000 credit card limit because math is hard and I like easy math. So once you start having a revolving balance of $300, so meaning that you have a $300 rolling balance every month, that starts to ding your credit. 50% is another ding, 60%, 70%, 90%. As you get to that max out of a credit card, your credit score starts to drop significantly. I've seen it where you could potentially be looking at 70 to 80 points of a drop. And you could have a client,
even if you're making your payment.
Even if you're making your payment.
Right.
But just,
or you're paying it off partially, right?
Right.
If
but
it's above 30,
it's starting to ding you, right?
Starting to ding you.
Right, and so that's a big thing. I've seen people with just paying off their credit card or paying it down to get under that 30% utilization, that has jumped their score significantly.
Right. So that's something to keep in mind too, is in being consistent with that for a certain amount of time too, right?
Yeah, exactly.
It'll start coming back, but you want some months behind it, right?
Right, absolutely. I mean, you'll see a significant jump pretty quickly, but the longer you do it, just like working out, for example, you're going to see some significant benefit after 30 days,
right.
But the longer you do it, the better it's going to work.
100%.
So last one we'll talk about is avoiding late payments. That is huge. If you already have late payments, you can try to negotiate those off with the creditors, whoever they are, whether it's your phone bill or your credit card or your car payment, whatever it is. If there's any way that you can negotiate and talk about if there was a hardship. I mean, we just came out of 2020, right? There's quite a bit of hardship there.
This is a great example for COVID, right?
And so if you can negotiate, maybe tug on the heartstrings of whoever you call, right? And say, hey, we had some tough times, and explain the situation. There are possibilities of getting those deleted, and that is huge to jump up. But just
so you can actually delete late payments off your credit too.
I have had clients that have been able to get their late payments removed, right?
And you would just call, let's say it's a dealership, you just call the dealership then?
Correct. Whoever's controlling the finance, right, of that particular vehicle.
Now let's say I've got maybe a couple months left on one of my car payments, and I've got some cash. Should I pay my car off to boost my credit?
Typical answer is no. Number one,
it's very counterintuitive.
Yep. Number one, you're not going to get the results that you think you're going to get.
Right.
And number two, you could even get adverse results.
It's just so crazy because you're doing the right thing, but they want their money. They want the vig, baby. Okay, they want the juice. Okay.
Well, and the other thing too is you have to remember that there are multiple things that dictate what your credit score. Algorithms dictate this score out to be whatever it kicks out, whether it's a 700, 720, 620, whatever it is. But one thing that they look at is not only credit history as far as did you have any late payments, are you keeping your credit card balances low, but length of history, right? So that's the other thing. If you have a credit card, don't close that. Even if you had a high balance and you're paying it off down to zero, don't close it, because you could be potentially losing 2, 3, 5, 10 years, however long you've had that credit card open. That is a benefit to you as well. So typically what I say is do not pay off those installment loans unless I specifically instruct our clients, yep, I've ran this through our simulator. It looks like your credit score is going to be just fine. Mm-hmm. Let's do that. And if it's a matter of doing it for debt to income ratio purposes, we typically do that at closing, so we don't do an adverse effect during the loan process.
Is there anything someone should not, this is different than what we were talking about, is there anything someone should not do that would negatively affect their credit while they're in the process of getting ready to buy a home?
Absolutely.
This happens all the time.
Absolutely. Do not buy a big ticket item. Appliances, don't finance any of that stuff. Buy a new car. Avoid that at all cost for multiple reasons. Number one, now you have a new credit check on your credit that I have to explain away to the underwriters.
Cool.
Number two, you have now a new line of debt that could affect your debt to income ratio. Thank you. And then number three, that credit check, it could, even though it's a big myth that credit checking drops your score significantly, if you're on the cusp of one score, it could be the matter of you not qualifying, or more realistically, of you getting a worse interest rate versus a better interest rate, because it could kick you over.
Happens all the time.
Yeah. So that's the big thing. Do not do those things. Do not buy a new car. Do not co-sign for someone. Just avoid those big ticket items until closing day or until funding day, more importantly, and you take possession of the house.
Hey, so if you're looking for a strategy, you want to really narrow it down, hey, reach out to Jeff. You can find his info below. If you're looking for a home, my info will be below as well too. If you just have questions, you want to reach out to us, leave them in the comments below. Thanks.